Good morning, everybody. A little late. I might have to adjust my start time in the future. Seems that things are getting more complicated. Kind of like the game of pool. That's a joke. Remember the old TD Ameritrade commercial? Trading options is complicated like pool. Anyway, um, so let's see where we are. We kind of tickled 64.75 here, and now we're just kind of pulling back a little. I don't know if there was a little newsy thing. I mean, that's not a big deal anyway. We're basically, where was yesterday's close? We're basically flat to the close, looking a little red. We were a little green beforehand. I don't know if there was a headline or whatever, but it's not like a big down goes Fraser bar. Yesterday was interesting in that we ground through a fair amount of market maker long customer short calls in the 64, 55, 60 area, in this area here, and kind of squeezed right through it. Now, I mentioned the possibility of a squeeze in my morning note. I don't know if I actually believed it, but apparently there it was. And maybe I'll go back and look over the Greeks and see and try to do a Greek autopsy, or maybe I won't. We'll see. Maybe it'll be a weekend note or whatever. Um, but anyway, be that as it may, let's get on to today. Yeah, people are asking about the TV string. It's in the newsletter, and I thought I put it in the string channel. Um, Part of the reason I was late, by the way, was I kept on screwing up the string. Had the syntax wrong, and that took me an extra 10, 15 minutes to figure out where I misplaced a comma or whatever. I didn't get it exactly the way I wanted it, but it was good enough for government work. Okay, so here we are. So today's setup, kind of like we've had the last few days, we're a little thin. And what do I mean by that? Let's go here. Okay, so this is options depth. Good morning, Boomer. When I say we're a little thin, we don't see numbers in the thousands like here. We have a big lotto or whatever this is here at 6,500, but even that's not hugely big. It's just big compared to what else is in the chain. This looks like, what are the 6,500, 6,500, 6,505 debit spready. Now remember, the plus is market makers are long, so customers are short. The minus is customers are long. We're looking at the market maker side. So, there's something over here. Up top is where the big stuff is, the 65, 15, 20, and 30. So all this stuff is up here. This is likely the other side of these spreads up here. So these are call credit spreads. These have been here for a few days. I did them on Monday and maybe even a few on Friday, and I closed them already. No juice up there now. So here we're in this kind of pivoty area. Good morning, Daniel. Right now we're in this pivoty area. What do I mean by that? You see 64.70, Some customer long calls, market makers short, kind of an attractant, but 75, almost 1,000 contracts. So he is kind of stalling right where we kind of failed before, near all-time highs right over here. So here's the all-time high, intraday all-time high zone, and we're playing around in here. Below us, 64.60 down to 50, kind of the bottom of the chop zone. Again, you have a cluster of positive gamma. We have this cluster here, but you can see it's kind of thin. Now the perspective gets kind of a little thrown out of whack by these big bars here. These, over 4,000 K, 5,000 K down here and up here. And so, just for the sake of getting a better perspective, I'm going to change the range to 64.95 on top, and we make a mental asterisk knowing that the 6,500 is big and all that other stuff on top of it is suppressive. We don't need to see this stuff down here at 63.25. Likewise, that's been there for a long time. So let's just give it down to 63.70. Not that we're going there, but good to see that where like the clusters show up. Okay. Now looking at it this way, actually I'm just going to add a little bit more on the bottom for perspective. Just so I can kind of see the landscape a little better. Now looking at it this way, that's a wide drunken sailor range, young man. That's a wide range. I mean, yeah, I can't argue with that, but that's a wide range. Now, when I was looking at it, I actually said to myself, well, do I make it tighter? The 50, what I made it, 50, 80? 50, 80, I said is what I kind of arbitrarily made it with 40. And I actually had 40 as kind of one of my ranges, as like, that's kind of where there's what's the word I'm looking for? A change in the complexion. But yeah, it's a wide range. So let's talk about where we get those numbers from. And feel free to pipe in anytime you like. Yeah, transition 64, 65. Okay. And Gamma Edge has their own verbiage, which is kind of common sense intuitive, but there are some nuances. And so one day, Paul has threatened to come on and talk about what he does and how he thinks about things, and maybe I can nail him down to do that. Um, Paul Duncan being the founder and main quantity at Gamma Edge, and also one of my mentors. I consider him one of my mentors. So anyway, so here's the 6550, 65, where we have this positive gamma cluster, but they're not big numbers. And so, hopefully, if you're a bull, we can kind of hold through there. Right below it, you have this 45, then you have this 40. So you have this whole frog in a blender, market maker, long, short. And here's the 40, the bottom of the drunken sailor range, of 45, the transition range, as Paul Duncan puts it, as Gamma X puts it, and I can't argue with any of that. Below here, that's kind of where we get into this. 64.35 should hold, becomes the next target. Now we have decent size down here at 25, at 30 and 25. So we really shouldn't appreciably go below, 40, 35, below the bottom of that range. The and then this is kind of the logical bottom of the chop zone, 64.25. But if that should break, if IV starts to spike, and we talked a number of times about how IV spiking widens the delta distribution, which has the effect of, let's forget why for the moment, has the effect of making these levels much more porous, and we kind of slice through them, especially if the IV spike is big enough. And if that happens at 25, well, then, kind of stally down here, 6,400. Um, so, yeah, again, I'm not expecting that. I'm expecting us to stay within the, let's just say, 40, 35, even the chop zone 50 range. And I don't see us breaking above the 6,500 range. Maybe we flirt with the all-time high a little bit. I don't know, but that doesn't seem like a high probability at this stage of the game. Let me just change it to back to here so we can kind of see things. And there we get perspective. So here's where 40 is where the pullback should stop, maybe 35. On top, we kind of stalled right where we're supposed to, 75, 80. And if we can get over 80, then there's kind of a path up this way. Now, I mentioned in my note, and you can see on the heat map, you see, that's the we ain't getting there zone, 65, 10, whatever. This kind of V looking, yellow V looking structure, 64, 65, what is it, 64, 50-ish on bottom, or 65.30. The green is kind of where we should stop on the way down-ish. And on top, 70 is kind of a possible close if we're bullish. And, and it's anywhere in this range. And, the setup doesn't scream anything much will happen. And considering what we're waiting for with PCE and with NVIDIA, that kind of makes sense logically. Not that market action has to logically make sense. The other thing that I mentioned in my note, and I've been talking about, so when we watch the intraday trades, and you can watch it however you want, and different people have different ways of doing it. And again, shout out to Gamma Edge. They have their own Vol U, Vol D, Vol M, their own way of following intraday volume and kind of charting the path. Other people have different things. What we use from options depth, basically, we're looking at just big intraday trades, not really following a volume pattern per se, but intraday trades. And we've been noticing that pretty early on in the day, the first 5, 10, 15 minutes, a few big intraday trades come in, 5 and 10 white iron condors. And then by 10 o'clock, the edges are pretty much set. And for an IC seller like me, there's still usually decent premium there, especially if I go 5 points above it and a little wider, because they tend to be 5 and 10 wide spreads. And so that's something that we target in the trading room, and we talk about. Now, what's been happening, particularly lately, when I say local, I mean around where we're trading. That's local. And so locally, you see here, you see this little tail right here? So locally, something was bought or sold here. So around here, there's what is it, 238 contracts, 629 contracts that easily get swamped, overwhelmed by intraday trading all day long. And so a lot of this stuff between, let's just say 70 and 45, this will likely change intraday, and the trajectory of where we close at the end of the day, you know, can easily change. Broadly speaking, getting up here is going to be hard. Making new all-time highs and getting up here is going to be difficult, not impossible. 75 round numbers seems to be a cap. Yesterday they sold 70s, 75s, and 80s, I think. Um, I wouldn't be surprised to see sellers come in at 64.05 in the morning and then maybe tighten it up to 64.15, a second tranche. And we'll talk about flies if we have a chance. And let me make a quick announcement and then we'll get back to this. Um, we're starting a WHOP sign in link and, um, write up so you'll be able to get your write ups on WHOP. We're putting the finishing touches on it and we're organizing stuff. Like to have it launched before the weekend, if not over the weekend, Labor Day special, whatever, I don't know. But we'll see. We'll see. It'll just make payment easier, management easier. Um, from Twitter or YouTube or Discord or wherever you are, you'll be able to click the WHOP and sign up relatively easily. We'll still be on Substack. You'll still be able to subscribe from Substack. Substack um, payments or subscriptions will be honored. But we'd like to, over time, gradually get more and more stuff through the WHOP payment system and on that website because it's just less back end work for me, truthfully. And people find the Substack platform kind of a little user unfriendly. So, anyway, that's that. Yep, Whopper. You got it. And so, stay tuned for emails, announcements, and tweets about that stuff. Let's see. All right, let's look at a couple more things. Let's just go here and just pull up market maker position exposure. That's an easy one. That's built in. And let's look at charm. Let me just zoom it in a little bit. I'm making it much wider than it's going to be just so that it's easier to get perspective. And so we see this area here. Let me kind of tighten it up here. Kind of broadly suppressive. In the beginning of the day, up until noon, not much influence from the decay here. Not much influence from here, some supportive influence all the way down here. Now remember, this is a whole complex, not just 0 DTE. So as we get later in the day, 64, 20, 30 down here is supportive. If we should have a negative day exceeding the expected move, we could end up in the 40, 35 zone, 50 round number, nice easy place to end up. If we're bullish right here, 64, 70, whatever, near all-time highs. And of course, we could have a new all-time high, and that puts us over here. If over 6,500, then these charm/decay up, quote unquote, to a 1 delta, which can send us up to the sold calls up here that are pretty much a rock. Now, in theory, is there a way to 65-25? Yeah, but that ain't happening. And so that's pretty much it. Let me show you a couple other things I mentioned in my note. And I'm going to have to stop giving away so much stuff. No, I'm just teasing. I don't mind doing this. Keeps me sharp. Okay. So here's my old trusty VIX VVIX ratio. Actually, someone in the Vol Signals chat mentioned 3 months ago. I kind of had a little different take on it than he did. He saw us as bearish. Now, this goes back. When the heck was this? This went back to June or something. He saw us as bearish. We were in the fours near five, and he thought we were going to go back down. And when I did a deep dive, I said, no, that's bullish. We're kind of overhedged. We're going higher. And of course, I was right. No, not of course, I was right. I was right. And that got me watching this thing. And real simple. You just do VVIX, VIX, and you put it on a chart. And the basics of the ratio are, and you can, look up, there's, a few different articles on it. Not a lot, but something. Broadly speaking, 5.5 to 7-ish is normal. You want to give a wider range, 5 to 8. And like everything with volatility, you kind of have to think normal within the context of mean reversion and where we are. And what this is saying is that we're in the normal range, but a tad on the nowhere near euphoric, but a tad on the complacent side, just a tad below 6, like we were just the other day. I think it was yesterday, really, or Friday, was kind of a tad healthier, a tad. And now you see, in December, we were in the party on Garth range. January and February OPEX, we were in the party on Garth range. And we were almost there again, like near 7, which we were Friday when we hit the all-time high, is the party on Garth range. So now we're kind of in a reasonable range. That's just something I just kind of been keeping my eye on. And here's just kind of a generic volatility dashboard that I look at. And you see VVIX over here down there, 91. That's kind of low. That's kind of low. So demand for volatility. I got a robocaller calling. Should I answer it? Probably not. Um, TDEX, demand for way out of the money. Protection, not that great. One standard deviation out of the money. Actually, not so bad. So there's some kind of demand for normal kind of hedges. What's this? Here's the VIX near 15. 15 has kind of been the level. The 9-day VIX, which I like to look at, which the other day, and I mentioned it, we briefly got into backwardation where the 9-day was above the monthly for like a day. And we turned around and bounced after that. I know a lot of people take backwardation as, we're going to fall apart, and maybe we will. I take it as an opportunity because that's not going to last, except in April or whatever, unless there's really something big going on geopolitically. That's not going to last. Vol is overpriced, and when it's overpriced, it tends to reprice, and that tends to be a headwind. I mean, a tailwind. Once we get the decay flows from there. And that's basically it. Let's take a quick look. Oh, fuck. Pardon my French. And I'm going to put you on there for a second, bit, hombre, and let you speak while I share my screen so I can sign in over here. If you want to say something.
Hey, good morning, everybody. First, I'm going to say I'm not going to be trading this today, so just keep that in mind. I went to bed late, so I'm just going to stay off the charts today. But if I was going to trade, I don't have the exact SPX number. Maybe you can help me there, Doc. But above 6482 ES, I'd be excited to try some longs up to. I do have the SPX number 6480. That would be what I'm watching here at Open.
So it's like 5 points higher. So SPX, that would be 65-ish.
Yes, a little bit higher than that, but yes.
Yeah, like 70, whatever. Kind of where that 70 pivot is on SPX.
Yeah. Um, if not, I'd probably continue. If we continue down, I'd be targeting close to 64.55, but nothing much further than that.
Right.
SPX.
Right. Okay. So seeing the similar narrow range, choppy, sloppy.
Yep. Absolutely.
And you want to tell the folks a little bit about what you're going to be doing?
Yeah. So we just launched the Whoop server. Whoop Wop. I'm not sure how to correctly say it, but it's it'll be really nice. Everything will be all together. You'll be able to access all of the newsletter posts, daily SPX plans, cheat sheets, docs, other trades, other traders, other trades, and my own daily ES scalping, along with Binkus's uh, SPX scalping as well. So if you guys are into more directional trades, that will be right up your alley.
Okay, cool. All right, now let me answer that question. We have a question here. Where's the gamma flip on your chart today? Okay, now link please does flow. Do you have a WHOP link that you could throw in the chat? And just with the understanding that it's not live, the payment isn't live, but you might as well get on. You might as well sign up for the free one.
No, it's live.
And the payment is live,
Oh yeah, we're ready to go.
but where's the? Well, we'll talk about that. Okay, so it'll accept payment.
Oh yeah,
Okay, it'll accept payment. We just haven't told it where and how to send it.
correct. But that
Okay,
no need for that to get it
okay,
going.
okay. Gotcha. Oh, isn't that clever? Isn't that clever? Okay, good. So it's live. So you have the link.
There it is in chat. And if anyone in the Discord has any questions, feel free to DM me at any time.
Okay, I don't see it in the chat, but whatever. Okay, well, I'll make sure to get that out. Okay, so let me answer the trading question here about where is transition. Let me find my chart. Okay, so the gamma flip, for lack of a better way of putting it, and I can say it that way because there's a number of kind of flips or inflection points, but to just kind of keep it user friendly, we flip right around 55.50. Here's where we start to flip at 50. But it's not a, 50, 55.50. Then kind of that opens the door to 45, and then the market has a decision at 40.35. So this whole area you could consider a flip. Kind of like, yeah, let's just say 50, 45.50. 45. Think of it, and think of it as, and the transition zone is a good way to think of it. Think of it as 45 to 65, we transition into bullish above 65, and we transition into grinding down below 45. Okay. Um, can you send it to me on Discord? Then I'll post it here. I just gotta have to get the back end admin stuff down better. We don't, I don't need to discuss this on Twitter and YouTube with the rest of the world, but I really don't care. I'm pretty transparent, you know. Um, so anyway, I'm gonna figure all that stuff out, and
I just sent it to you in case you want to put it in the.
okay, yeah, let me do that. Okay, it's in the chat now, and also the Options Guild website, which my brother and I launched like way prematurely in like April, is now kind of live. At least if nothing else, there's a link there. We can get to our other stuff, and so there's more ways to contact us. And the plans from March, April are kind of coming into fruition uh, in September. So it took about a half a year or whatever. It took a season or so. But we're excited. And HBO 45 650 on Mental Q, and I use their stuff too. So we're all kind of seeing the same thing, potato, um, different nuances on how to look at it. In any event, and pay attention to this as best you can. Locally, I talked about that before, near a spot, we're thin. So a bunch of traders coming in buying 64.50 or 64.45 puts could pull us down. Then on put monetization, Gamma Edge has a thing, COTMP, whatever the initials are, the area where people tend to monetize their puts, and we tend to bounce there and turn around, even if it's negative gamma. That's something to kind of pencil in the back of your mind, the monetization zone. Just think like a trader. If you bought these puts, let's just say, which I'm just using puts hypothetically, 20 minutes ago, and we're there and we're accelerating toward it, and you're agreeing how long you're going to hold them. And sometimes that's quantuition. You get to watch the volume. In the old days, me and my brother just sat there watching the volume. And even not such old days, 2 years ago with my boy Punklandia, we just kind of watched the volume and kind of, you have to kind of make assumptions, and they're not going to be 100% right, but they're righter. And now we have actual data, so we know what's going on. Um, so, yeah, that's it. Okay, I'm going to hop. I'm going to go see what Valsigs has to say. Um, a good follow on Twitter in case you don't follow him. Guess let me put a few links in here. I mean, I would hope by now most of you quantity people are following Valsigs and are following Alma. And my buddy Yamco is really good, under followed, IMHO. Maybe I'll do a tweet. And of course, options depth. And we'll throw mentor Q and gamma edge in there to round out the list to make it fair. NVIDIA earnings skew. And of course, gamma. And gamma edge is a good follow, aside from of course everybody knows about gamma. I don't even have to put them in there. Gamma Edge is a good follow. They do these videos, and they have a pretty comprehensive system. And they got a lot of individual stock stuff that I used to do a lot more. Now I just do a little. So these are just some really good follows. And although he some people give him shit, pardon my French, I make a lot of money with this guy. See, contrarian. Oh, and one more. See that? What am I doing here? Scott Nations. He did a broadcast with us. It's on my YouTube channel. You should watch that. You could watch it. You can do what you want. Okay, now I'm really going. All right, take care, everybody. See ya.